So the S&P has started breaking past its resistance levels, and so has the other indices. And I want to show you exactly what I see on this chart. Also, we're going to look at the hourly chart to show you exactly what's happening on the hourly chart on a smaller time frame. So let's get straight into it. Do not place a trade based on what you're seeing in this video today, because trading is risky and it can cause substantial financial loss. There are so many areas you need to become good at to become a good trader. Emotional mastery, chart reading, trading systems, money and trade management. So this video is just educational only to help you become a much better trader. So what we're looking at right now, we're looking at the S&P 500, and we can see what's happened just recently. We can see this volume, and I expect this volume to be a lot higher. The market's actually just closed. So I expect maybe in another hour or so this volume will be a lot higher. And we can see we had a nice high close where we are right now today, way up there. And what we can see that this resistance level here is in sight. So it makes sense for it to, where it is right now, it makes sense for it to have another nice, 1 or 2% update. And possibly even run to the high side. We can see on the Dow Jones as well too, that again we created this like flag formation, and then we had a nice little update to the upside as well too, again creating a nice flag. So that's a very bullish sign. Running into the Russell is actually the weakest because it's still hovering and still struggling around that resistance level. But with the Russell, we actually had a lot of movement to the high side already, where the Nasdaq and the S&P 500 just went sideways for last week, and then we had an upward movement creating a bull flag. Same with the Dow Jones, but where the Russell has been going up for quite some time. So I wouldn't be too surprised to see that one struggle just a little bit. And also the Nasdaq just keeps going high. We had like a little down day and then we'll continue moving up. So I do believe we're likely to see more upside moving into, and maybe we're not going to get the pullback. If you look back the last two Decembers, to December 2014, December 2013, the first half of the December we actually had a move to the downside, and then what happened is we had a move. And then the second half of the December, we had the Christmas rally. So maybe we're just going to have a Christmas rally for the whole December. I'm not sure, but it's starting off on a bullish note anyway. So looking at that there, we can see exactly what's happening through there. Now I want to bring your attention, and I want to take everything off the screen, and I want to bring your attention to the hourly chart. So let me bring up the hourly chart. This is the hourly chart here. And whenever you're thinking about looking at, say, okay, is the market going to start turning bearish, or is it going to stay bullish? It's a really easy, simple analysis that you need to do to see what is actually happening. So whatever chart you're looking at, whether it's a forex chart or a futures chart or a stock chart, just look at this hourly chart here, and you can see that obviously we had this trough, we had this peak, we had this peak up here, we had this trough down here, and we had this lower peak down here. And you can see how the market started to change through here as we started to get these lower peaks and now also lower troughs. Okay, the market came down through here, it came down, gave this lower trough, gave this lower peak. So you can see that the peaks and troughs definitely tell you what's happening. We came back up, gave you this higher peak, so you can see how we got this higher peak, then we had this overall higher trough, very ugly through there, and the market started going up. And now the important thing is that on the high side, when the market's going up, the important thing is that we keep making higher troughs, higher troughs, higher troughs, higher troughs, higher troughs. As soon as we break that lower trough, as soon as we break the troughs on the high side, as I said before, when the market's going up, the most important thing is the lows. So as long as we're making overall higher troughs, that's good. If it starts to break a lower trough, and then we start to form like maybe even a bear flag like we did here, and then a lower peak, then that's going to be the first sign. This here is going to be the first sign of a breakdown. Then the market did break down. We came down through here, the market reversed, came back up, gave you a lower peak, but then something what happened, we gave a higher trough. And now what's happened, markets moved up, we gave this peak, we gave this overall trough, and now we're continuing to break out. So whenever you're looking at the markets, no matter what chart you're looking at, a forex chart or future chart, look at the smaller time frames and look at that. If you trade a daily chart like I do, if you look at the hourly charts, the hourly chart is going to tell you what's actually happening within that stock, and if we're going to get a turning point, when is that likely to be. So right now, looking on the S&P 500, we had another nice high trough, we got a nice breakout. So this point up here looks a very nice target on the S&P for the short term. Anyway, hope you enjoyed this video. Remember, success can be yours if you go claim it. So step up, take massive action, and face your fears today.